Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, February the 5th. So we are coming into the the rebound of all rebounds that if you were trading the last week or so, you know what I'm talking about. We came up today, almost touched the all-time high here at 33, 37.58 today. The previous or prior all-time high 33.37.77. So we're 19 cents off of the all-time high, which was only 10 days ago. And this is what's kind of crazy. I wanted to talk about a little bit today. So here, as you can see, there's the all-time high. 33.37.77. We hit 33.37.58 today, so about 19 cents off that. I really kind of thought we'd take that out today. But what's crazy about this move is from 33.37 down to 32.14 is 120. We lost 123 points in, let's see, 7 sessions, and then we went back up to all-time high in 3. 1, 2, 3. Normally it's the other way around. You take the stairs up and the elevator down, that type thing. It's just the opposite, and that's a pretty mind-boggling move. In fact, yesterday in the ES we had 57, 58 point move, and then today was another 30 on top of that. 30. Let me look. 30. Wow, 36, almost 37. So crazy, crazy, crazy moves. And we know that this all started. We were at the all-time high, and everything's great. Apple reported, and Amazon. Everybody, everything's great. The world's great. And then all of a sudden, coronavirus came out. And just kind of sent everything in a tailspin for 7 days, and then all of a sudden, coronavirus doesn't matter anymore, and we're right back at where we started. Mind-boggling how that's how it's turned, and that's kind of what I want to talk about today. Is where that puts us relative to where we've been and where we might go from there. So the coronavirus, as we know, when it first came out, was first announced, and the market kind of started in the downward spiral, which I think was probably the market. The valuations, there's no way to sugarcoat it. Valuations are as high as they've been since 2002 as far as the S&P goes. A little frothy, could stand to pull back on, and I thought it would probably pull back a lot more than it did. We came down 123 points. I thought we could easily come down another 100 points easily, and we would still be in a pretty good uptrend, right? But the market's been rallying for a couple of reasons. The last couple of days, I thought it was so bizarre that it says the market rallies on easing fears of the virus because a cure has been found, or scientists are working on a cure, that kind of thing. And of course, all you have to do is Google it. No, there's no cure for it. In fact, the World Health Organization put out a statement, and they said, let me find it here, and I will quote it to you. Let me find it. Okay, here it is. It says, World Health Organization has said that there are no known effective therapeutics against the virus in response to the media reports. So all that's bogus. I don't know why the market's smarter than that. I don't know why it's rallying on that. Plus, and I do know why. It's probably mainly because of the Chinese government pumping $22 billion into the market in the form of liquidity, and so it's like a gigantic quantitative easing kind of kicking in over there to offset the damage that's being done to the companies over there that can't work. They can't work and produce and all that stuff. So my question is, if all the factories, the whole country shut down, right? Cities shut down, countries shut down, no airplanes coming in, no one coming out, that kind of thing. There's no workers in the factories. There's nobody driving the trucks to deliver the goods. There's no consumers buying the goods. Yeah, for the most part. Even if you buy online, they still have to be delivered to your house and all that kind of stuff, right? And they still have to be manufactured. So we're going to see a boomerang effect from this probably over the next couple of quarters. And I don't know if people are just like, oh, I'm not going to worry about that right now, but it's coming because we saw Disney closing theme parks. We've seen Ralph Lauren shutting factories over there, Nike shutting factories, the Macau casinos closed. That will have a big impact, right? And even all these multinational companies that we have, they buy from China, they manufacture in China, they sell to China, from a consumer standpoint. All the freight transport companies, all that kind of stuff. There's going to be a big boomerang effect from this, and I don't think it's going to be good. I do think that when we do start seeing more impact of it, and it probably will be not for another quarter or so, probably. We might get a real good chance to buy the dip kind of thing in those names. And I just don't know how much it's going to bring our market down, or if it will. I assume it will, because we know it's not going to be good. But I don't know. The market's been super, super, super resilient, as we have seen. And some of this bounce also I read was that the Democratic Iowa caucus didn't go well. Not looking good for Trump. Not looking good for Democratic Party after the caucus the other night. That was from Jim Cramer. That was not me. Market popped on that. The State of the Union was good. The market pops on that. And you can kind of read in between all those to figure out what is driving the market. No one really knows, but I keep reading China stimulus. I keep reading political. The market likes Trump. There's no way around it. The market likes Trump. So. We take all that with a grain of salt. As far as trying to figure out what's making it move, all we do know is that it's moving, right? So we'll look here at the S&P, and then we'll wrap it up. Basically, we're back up to the all-time high, so we have to wonder if we take this out and just keep going like nothing ever happened. And the key will be fewer deaths and fewer people affected by the virus, and we've got it under control and all that kind of stuff. Or it's getting worse and spreading and all that kind of stuff, I think will be the big deciding factor. And I'm talking about in the next 4 or 5 days. And let me give you a number. Right now we have 24,000 people that have been affected by it. And I believe the World Health Organization says if we get 52,000 affected by this Sunday, that's the 9th, let me see what it says here. The systemic risk estimation will be reassessed and scaled up significantly. So that, and I don't think we'll get to that level. But if we do, look for that. Possibly, probably. I don't know. I don't know if we'll get to that or not. But I've been watching this. I've been checking the numbers every couple of hours, and it seems to be getting worse. Now they'll start slowing down simply because of the containment factor, right? Everybody's locked in. It's not going to spread as fast. But anyway, hopefully we see this thing peaking and slowing down in the very near future, and kind of things get back to normal. So as far as the market goes, we want to trade this momentum to the upside with some very tight risk protection on the downside, some hedging, some stops, some small size, that type thing. And other than that, just be very careful. There are a lot of honey badger names out there that just don't care about the market. Tesla, Beyond Meat a couple weeks ago, Biogen today. There's all kind of one-off names that are just continue just ripping higher. So try to stick with the honey badger type names, and just be careful out there. I like this kind of market because I do get a lot of opportunities from the whipsaws, but it's very nerve-wracking because it's so hard to get on the right side, and you get on the right side and then you immediately get smashed when it goes the other way. So Just be very careful out there. Again, size small, and keep an eye on everything. So with that, let me wind it up. Thanks for the time. Hope this helps, and I will talk to you at the next update. Take care.